What is going on, guys? It is the Zoomer Value Investor here to talk to you guys today about this recent market pullback. So we reached an all-time high here on February 14th, about 610 on the SPY, dropped now about 13.66% at this time. Peak to trough, probably closer to like 17%. SPY got as low as about 500, so quite the drop there. Now, quite a fast drop, right? You see here within the course of like a month and a half, 2 months, you got quite the drop there. Now, a lot of this, honestly, and how fast this is, you can see this is maybe the market kind of anticipating. But then this drop here, particularly when we're at 563, and then we drop here into April 4th, that was a matter of weeks, and the SPY dropped 60 points on the SPY ETF. So that's quite a big drop. That's but the thing is about a drop like this is it's probably a policy-based drop, right? You guys hear the thing about like the Trump and the tariffs and all that. Policy-based drops, they can go down and they can come back up as equally as fast. This isn't so much of like a market fundamental kind of drop. And we can even look as far back here as CV19, right? You can see how fast this market dropped. I mean, this was this is what happens when you're, having to close down the economy, right? Because of policy, public health policy, all that stuff. And then you can see here, it ripped right back up. And a lot of that was because of the Federal Reserve interest rate changes. So policy-based drops can oftentimes come back up just as fast as they went down. Maybe even faster going up, because markets do tend to go trend to the upper right. So me personally, as a value investor, I'm not so panicked about a drop like this personally. I'm going to go into a lot of market fundamentals in this channel, as well as some individual stocks. There's still so many deals out there, guys. So many great stocks at the 200-day moving average or lower. See here, the fear and greed index is quite low. Extreme fear. This is just kind of like a market sentiment kind of indicator. But this is the time to buy, honestly. When I see this in extreme fear, this is, as a value investor, I get really giddy. You got the University of Michigan Consumer Sentiment Index here. You can see that this is quite low, 64.7. Look back to time like a CV19, even it was higher even during then, or But this isn't quite like '08 recession levels or nothing like that. So we're kind of like at an in-between where the consumer sentiment and consumers are kind of signaling maybe they are feeling it on their pockets, maybe they don't want to spend as much, that kind of stuff. So that's something to be aware of. Another thing I thought was interesting was the ISM. The ISM is really at about 49 points. So 50 points is about the break even. So it's really feeling like this could go either way, where the the purchasing managers index, ISM, this signals how much do manufacturers want to like put in orders and continue production and that kind of thing. So you see here the sharp decline in COVID. This was largely because of people were like, okay, we can't produce, we got to like quickly like bail on a lot of these orders that we originally were maybe planning earlier in the year and that kind of stuff. So it's really interesting that it's kind of at the break-even point. It could go either way. So a lot of this stuff is like, okay, it could go either way. But just giving you guys a macro idea of like what's going on in the economy right now. Now, we got the Chinese yuan at a 18-year low. So when you guys hear stuff about like, the dollar index is like dropping or whatever, I think it's important to kind of keep in mind that where is the dollar relative to like all the other world's assets, amongst this like tariff craze and stuff like that. So this isn't like the lowest the dollar's ever been or nothing like that. It was, way weaker dollar and back in like 2008 financial crisis. We even had a weaker dollar back during CV19. So I'm not like reading into that too bad, even though, and it's quite interesting too, because you can actually look at in this trough we had here in 2022. And another thing I want to point out, this was like a liquidity crunch, right? We had a stronger dollar back in 2022, and that was part of the reason the market dropped. When you have a strong dollar, you're going to be able to buy assets for cheaper. A dollar is going to go a lot further on the market. So, part of the reason why we had this drop on the SPY in 2022 was because the dollar was doing so well. And it was causing the market to drop. And as you can see here, honestly, from peak to trough, this was a much worse drop in 2022 than what we already have just now. And we already kind of had a bottoming out on April 4th around that time. I remember around that time, the market ripped actually 7% because, like I was saying about policy drops, you guys, this thing can go back up faster, or if not, just as fast as it ever dropped, right? Something to really keep in mind. So if you guys really want to read more about, I was talking about the dollar and the Chinese yuan. I think the Triffin dilemma would be a good place for you guys to start if you guys are interested in the macro. I am interested in the macro, but at the end of the day, guys, I look at companies. I kind of stick to like Benjamin Graham, the intelligent investor, those kinds of Peter Lynch, One Up Wall Street, those kinds of like philosophies of what the company is doing is my primary interest. The macro comes secondary, right? But it is interesting to me. And I think the Triffin dilemma is a good place you guys could start. And essentially what the Triffin dilemma tries to say is that it's this idea that you can't really run an economy not with trade deficits and at the same time be the world reserve currency status, right? So that's kind of something to think about with the US dollar. And a lot of the way I see the market moving here with like this is a lot of this is investors flying into bonds, and it's kind of signaling like, oh, we're skeptical about the dominance of the US dollar as a world reserve currency. A lot of that's FUD, you guys. At least until 2030, I think it's pretty obvious that there's no other currency that can hold a world reserve status like the dollar. So at least for the next like 5 to 10 years, I think we're gonna have so much strong markets. There's gonna be corrections, fluctuations, drops in between, but we are gonna have markets trending upward and to the right. And so I hope that guys was helpful as like a little quick overview on the macro. Now I'm gonna get into the juicier stuff, the stuff I care more about, which should be talking about some individual names finally. So Google stock. I think Google is a very, very attractive stock at these levels, you guys. Peak to trough, we got about a 25% drop on Google. A couple of the Max 7s I'm going to go through here. This one is great though. Valuation under a PE 20 of Google. Easy buy there, guys. A lot of people talk about how like learning language models, ChatGPT, how that might cause Google to drop. Now, the thing about that though is that Google, they're very well diversified at this point. They own YouTube. Google Cloud is rapidly growing. So they got so many different things, and they have some of the best APIs in the world. So I really think that Google is at a point where they're starting to kind of get to the point where they're diversified enough where like even if something happened to the cash cow of Google search, and it is still very much a cash cow, it just is operating more so like a Frankenstein business nowadays, that search engine aspect of Google. And the faster things that are growing are, like I was saying, Google Cloud, and YouTube, and those kinds of things are kind of really carrying, I think, Google at this point. So, you look at like how much money someone like Mr. Beast is making, you consider like, Google is taking a fat cut of that, right? I think Google is going to be here to stay. There is a little bit of management risk there, right? I would say that, they don't have Andy Jassy, Amazon CEO, running the business, right? And a little bit of a management risk there. Imagine someone sitting on an empire and maybe you don't have the greatest ruler. And that's kind of my only critique of Google. Amazon, phenomenal company to buy here around these levels. I think honestly anything under 200, I'm nibbling at Amazon. So you got AWS is by far, in my opinion, the most attractive thing about Amazon. I think if AWS spun off today for whatever reason, I wouldn't be surprised if it reached $1 trillion in valuation just on its own. So then you got also of course, the e-commerce side of the business, right? You got all the different acquisitions they made, Twitch, iRobot, the Roombas, all those different things, right? So very huge conglomerate here at Amazon. But like I said, AWS, that's really going to be the cash cow. They have the greatest cloud platform in the world. So Amazon at these levels, I think, is incredibly attractive, you guys. Handsome pullback to get in here. Mag 7 stocks, man, they're just the gift that keeps giving. I remember being able to buy this as low as these levels here, well below $100 per share. And man, that's paid out more, and I just want to accumulate more, you guys. the lifetime perspective of ownership here is so important. It's just how can I get my hands on more? I'm really getting greedy here at these levels, you guys. Of course, staying allocated, staying smart. I have defensive names. I had a lot of defensive names that kept up really well, such as like British Tobacco, BTI, those kinds of names kept up really well, very defensive kind of names. So I was able to sell a lot of those defensive names, raise cash, and now I'm able to kind of build up my core positions a lot more, right? Because I was well allocated. I had a cash position. I had defensive positions. And the thing is awesome is these defensive positions, like I was talking about AstraZeneca in one of my last few videos, BTI, those kinds of defensive positions, they actually did well in the last couple months. They had some pops. So I was able to get out of those with a small profit, and I'm able to roll these into a lot of these other companies here. Microsoft here. Microsoft, I've never seen a pullback like this on Microsoft, you guys. Look, Microsoft's been down in the past year. Year to date, it's down 12%. So I've personally never seen Microsoft this cheap, under a 30 PE. Microsoft's also a phenomenal company. All the different products they own. So I'm not going to rule out even like, I bought my first share of Microsoft, my first ever share of Microsoft ever. I just picked it up very recently. So I'm not like as crazy about this one. I think Amazon and Google are maybe the better snipes, specifically Amazon. But Mag 7 stocks, I think that's a great place to start if you're trying to build out your core portfolio, especially if you're like a younger person or something like that. These are phenomenal companies to own. I have videos on my channel about the dominance of big tech if you'd like to check those out. Why big tech is the winner of global markets. It has to do with these companies operate in a pocket of capitalism here in the United States where they have the ability to run so much. They have very advanced legal teams, and they can really just kind of like dominate the ecosystem of where they operate. Meta Platforms. Now, look at this handsome pullback here on Meta, you guys. I remember I was buying this one as low as under $100 per share even here, too. And this one really ramped back up. Really impressive company. I always knew they had the potential to do this. Their ability, they are probably the most profitable big tech. You actually look at the profitability. And I wouldn't be surprised if they're the first big tech to hit 10 trillion in valuation even. Because I think they are that profitable. They could scale up even that further into the future. But look at this pullback, guys, from 736 per share all the way down to 500 per share. That's a 32% pullback about. I'm not quite nibbling at this one yet. Like I said, I still have shares left over from like 2022 and the stock traded way, way lower. But I think maybe around like here, like the mid 450s, back to around the levels it was trading at maybe in like July or April or May. It gets maybe more attractive then. So like the lower 400s is kind of where I'm looking at Meta, you guys. Another great one here is Apollo Global Management. Now this is private equity. I never really thought I'd get a chance to get into private equity stocks because I thought they were like so high flying. But look at this pullback, you guys. 29% drop on what I believe is one of the greatest private equity companies in the world. And you guys can go on YouTube and look up videos of like how private equity dominated America or stuff like that. And it'll really give you guys an idea. It's almost like what I was saying about big tech. These firms, these private equity firms are so dominant in their pocket of the market that you're almost going to miss out on a lot of gains if you're not involved in companies like this, right? And Apollo APO stock, this is one of the market leaders. I think you guys could also probably have good success with KKR. I'm personally just kind of going with Apollo because they're the ones I know maybe a little bit better. I'm a bit more familiar with like some of the, some of their acquisitions and things of that nature. So, but KKR I think is also a very attractive PE firm. They dropped about 39% peak to trough. And another thing I think is interesting, I actually do like this channel, guys, Value Investing with Sven Carlin. But a month ago, he dropped a video about like, oh, private equity is in like a huge bubble, you guys. And the thing is, I actually think this is a very bullish signal because you look at where this stock was a month ago, and it had already dropped like it already dropped like quite a lot, right? So KKR is already at 116 down from like 163, and then APO is already at 144 down from like 177. So if he was making those videos like back in December, like 4 months ago, and he was like, "Oh, hey guys, there's a bubble here in private equity," I would be like, "Okay, yeah, that makes sense. Like maybe the stock has gone up way, way, way too much." But the fact that he's making this video now when the stock's already gotten like a huge, huge haircut off the top, I think that's actually kind of like a signal that it's like flooring out and stuff. That it's like, okay, maybe we should start buying here, right? Semiconductors. I think semiconductors are very, very attractive. I think it's a great time to get back into AMAT stock. This to me has just been the gift that's kept giving. I remember getting back into this one in 2022. Sold it a little early around, I bought it around a cost average like $100, $110 per share. Bought through this trough in 2022. Sold it around like 130. I just needed cash. I saw other plays, maybe being a little silly. Look where it's back to. 130 on applied materials. Man, I'm so happy. But this is great because this is a pick and shovel play, right? So this, I think you don't got to worry so much about like with Nvidia, it's so much like, oh my gosh, China and they aren't selling the H2O chips. And then it's also another thing I noticed about Nvidia is you have things like these Bangladeshi companies, they're now buying Nvidia chips, and then those Bangladeshi companies will sell to China because, as we know, we have the Trump ban on direct sales of certain Nvidia chips over to China. So there's just so much like China FUD going on with Nvidia, where I almost think like a pick and shovel play like Applied Materials that still has proven the ability to create crazy alpha during certain bull runs of the market. Look at this, guys. Even after the drop, 165% over the past 5 years. If you were investing in this stock, guys, you're going to be well performing the SPY in a stock like that. So the fact that this has dropped, 40, like almost 44%, you guys, is so amazing. So amazing. Taiwan Semiconductor. So this is also a huge China risk, but phenomenal company. Really, you're really owning the biggest shovel in the market. This is a pick and shovel play, but this is you own the land type type thing. So Taiwan Semiconductor, the fact that this has dropped almost 32%, very, very phenomenal and worth noting if you're out there looking for some deals. Arista Networks. Now, I talked a little bit about Palo Alto Networks before. That's a stock I still do own, and I'm really surprised how well Palo Alto's held up. I think this drop on Arista is a great time to take advantage. 45% peak to trough about, and at one point about 50% down to $64 per share. The thing about Arista is networking company makes like very advanced like switches, layer 2 switches, those kinds of things. I think it's a great time to get in. I think this is definitely the better like networking play compared to like someone like Cisco. You have a lot more of a better risk reward profile here. I think there's a lot more potential for alpha here. So I'm a really big bull on Arista. I would like to acquire it sometime here soon. I haven't picked this one up quite yet, but it's on my list. I'm trying to get in on it here during sometime amidst this drop, right? And as you can see here, guys, if you were in this one the past 5 years, you guys are doing really well. And I think they still have a lot of room to continue this phenomenal growth they've had. Alexandria, I've talked about this before on my channel. This is a life science REIT. Guys, the drop on this is crazy. And this was, this was always viewed as like kind of like, oh, this is like the blue chip REIT or whatever. And there's no other REIT quite like this out there on the market that specializes in life science like them. Has contracts with some of the best, Novo, Lilly, you name it. They're almost involved with some of the best blue chip pharma companies out there, and they hold campus and real estate for those companies. So I think this is a great time to get involved and get in on this. It's gotten down to like a crazy cheap valuation, you guys. Boeing. So this is, we're kind of getting more into the core value investing kind of stocks here. Boeing, it's gotten too cheap to ignore. I'm not going to really particularly say this is a quality company, but it's just one of those companies where at some point there's a company so big and it gets to a price so low where it's like, okay, I can't really ignore this. I really hate that it had that pop recently. Like you look at these last 5 days, like this pop is really annoying from 150 to like, that 4% pop there. So ideally, I'm buying this more around like 150 or lower. But I think Boeing looks so attractive here, guys. We just got to get those one or two extra red days, right, on Boeing. And then I think this is like a crazy attractive stock. I could easily see this in like 3 to 5 years being like a very easy double, up to like what it was, all-time high around 265 or something. Pretty easy double on Boeing, I think. Intel, again, I'm not gonna like say this is a super great quality company, right? But I think there's a lot of potential here. A lot of talks about Intel teaming up with TSM on the market. So TSM, which recently opened up actual plant here in Arizona, and that's one of the reasons why I think TSM is still a great play, even despite the tariff talk and all that. Is they have a lot of manufacturing already in the U.S., so it's like, I'm not gonna tweak super hard about it. They have already proven a way to get around these tariffs. And then Intel, I'm kind of in on because I think, they are going to maybe do something where they team up with TSM. They kind of start being a turnaround play. And I've always kind of roasted Intel when it was at these levels. Way too expensive. Like even $25 per share for Intel. That's too expensive, you guys. When you consider the risk, right? It's just not worth paying $25 a share for a company like this. That's just been absolutely defeated by other competitors that are just better. It is kind of a legacy company, does have a lot of legacy resources and stuff like that. But around $18 per share or lower, I think is quite interesting. That's a lot cheaper of a price to pay than $25 per share. And then lastly, I'm just going to talk about Bitcoin, you guys. I think any pullback on Bitcoin you can get is something to keep in mind on. I made my video about FBTC a while ago, and I was saying in that video, I was like, guys, don't go crazy on this stock because I'm telling you guys, it's going to pull back. When Bitcoin does that thing where it ramps up like that, it normally does eventually give up some of those gains. And we're finally starting to see that here. So peak to trough on Bitcoin, I'm pretty sure we got about 21% at this point. So Bitcoin, I think, is still very, very attractive because I think there's a lot of bull thesis there. I think we finally have an administration who's like somewhat friendly to the asset. Never really had that before in the United States history where they're kind of willing to come to the table with an asset like this. And I think it's quite interesting. CleanSpark, my biggest position. This is, in the last crash, this is what I was buying. I bought this at a $2 per share cost average back in 2022, 2023. Put 10% of my portfolio into it. And now it's my biggest position. And I've actually taken profit on it, quite a bit of profit. I've sold well more than I put in at this point. Back when it was at these levels, like first started, remember selling it at like $9 per share, whenever this first pop was. And then I remember I put a video out then, and then I've also sold quite a bit when it was around these levels, like the $20 per share levels and things of that nature. Getting back in on it, I would probably wait for something more like $6 per share, you guys, is when I'd maybe be interested in accumulating more ownership in a company like this. But CleanSpark to me is the most attractive it's ever been. I have been actually quite impressed. They are the most profitable they've ever been. You see here they got the positive price to earnings ratio. Never had that back when I was first buying that in early 2022. They've probably like 3, 4, 5x their mining operations since then. Their exahash rate has gotten dramatically faster. It's industry leading. So incredibly attractive stock. So I hope you guys really enjoyed this video. I'm just really getting out there that, guys, stocks are so attractive right now. There's so many stocks at or below the 200-day moving average that are super high quality. And I will also say, make sure you keep a good allocation of cash, defensive positions, things of that nature, because things could get worse. They always could get worse. The thing that made the market pop back and kind of bottom out around April 4th, I mean, that was just all that was a tariff announcement of a delay on the tariffs, right? So, a delay just means, okay, the can's been kicked down the road. We're probably still going to have to revisit that issue at a later date. So we'll see where the market goes from here. But you guys, this is the pullback, right? This is what value investors, we start rubbing our hands. We can get a little greedy here, y'all. So thank you guys so much for watching. This is the Zoomer Value Investor signing out. Peace.